recording. Okay, officially welcome to part 2 of the Trading Foundations working sessions. This is the intermediate/advanced session, but everybody is welcome. Really, the only difference is we're not going to limit anything here. Anything goes. That's this session. First session, we're really trying to make sure you feel real comfortable asking any question. The most basic of questions. This should be your safest place to come, whether it's the Tuesday first 45 or tonight's first 45. If at any point you don't feel that way, those of you here live or those of you listening to the recording, that's your safest place to say, hey, I don't, remind me, what's the difference between a market and a limit order, right? Things where people know that's the safest place to ask questions. And then the second half is where we really try to apply, move a little faster. If you're a beginner, you get to see what it's going to look like, even if it might feel like you're drinking from the fire hose. That's what we've tried to create. If we haven't, certainly let me know how we might do better. And then we'll go from there. My name is Scott. I'll be your host. I'll be your friend, your compatriot in this journey that we call trading. Disclaimers: we're not brokers, we're not advisors, no recommendations, no guidance, education and illustrative purposes only. And now let's go work. It's a working session. Let's go do some work. Okay. Pop quiz. Pop quiz, hot shot. Do you see the SPY? You should see my screen. You should see the SPY. I'm trying to get my somewhat flawed drawing tool that I keep using, even though it locks up sometimes. Don't worry about that. Nobody worry about that. Okay, here's the quiz. What letter do you see? We've talked about it. We're like, I don't know, maybe we could still get it. We don't know. Anyone see it? Because we got it. Winner, winner. Chicken dinner. The V. We got the full. Whoops, I missed it a little. The full V. That's quite bullish, you guys, right? We got, now we really, even today, double top. Ooh, I don't know. I mean, it's hitting resistance, but remember, we typically are thinking about tops when we've been going up. Right now, what am I thinking? I'm thinking that this V is definitely part of this break of a consolidation. Any more, and we get a higher high, then we get a quarter point back, right? Yeah, that's what I would be expecting, Bob. Expecting a little pullback. And then, yeah, I'm expecting it to be more bullish. Absolutely. Right? When we get this, because now, what do we have? Shoulder, head, shoulder. And that dotted line becomes the neckline. But I'm not waiting to break the neckline. I'm expecting to break the neckline. Why? Because I've already... Two reasons. Because A, our market posture has stabilized. We've already seen that. We've already been like, oh, okay, here we go. We already had a week where we're like, all the things that had been deteriorating are now, staying the same. Okay, great. The second reason is because our posture never dropped below 2. We never even got to neutral. The fundamental score stayed more bullish than not, right? And I hope now you can see why, even though I may have given some awkward explanations for why is it staying more bullish, even though it seems like we could be scoring the short-term trend negatively, because when it just first starts to transition, we don't move quickly. We let our score adapt organically, quarter point at a time. And now you can see it's going to allow us to come back in. We got the correction. I saw one place say 8 something. I have it at 9.7. The NASDAQ definitely was a 9.7% drop. The NASDAQ was worse. So we had what we would consider a correction. We now have a V pattern. I mean, it still may not be done. What about today's volume? Average 60.846. Okay. 6846 times 1.05. We need it to be 63.88 million. And it was 62.6 million. So even though the volume did increase from here to here, we did see more buyers. Definitely more buyers than the day before, but still not a scorable amount of buyers. Okay. What does that mean? Doesn't mean that much. It just means, that's not going to change very much. But yeah, I would say that even if it's the same high, I would be like, I'll probably give that a quarter point. The VIX is bled off so much, I'll give that a quarter of a point. And we definitely look like we're poised for our market posture to increase, even if tomorrow is the first day of what might be a 2 to 3 day consolidation. That 2 to 3 day consolidation is what would be setting up, like Bob just said, a little pullback. And then we're thinking the institutions. Look at okay, let's get to the VIX. Any questions about this? I wanted to start with the V because we said, if you remember, I was right about the V, and you're like, wait a second, you didn't say. I said V. It was my third scenario. I was like, I don't know if we're gonna get a V here, but it could. So it was on the list. Did I aggressively trade a V? No. Olympic team heading home on their official airline. I love it. Oh, I hear there's like weird blowback and like fallout. They're like, they want to know how this thing was scored. My wife came in and showed me a video of her coach / husband. And he actually threw that exact same move. Like that move was his original move. I don't know if that's like the Thriller, that looks like Michael Jackson doing the Thriller move. Yeah, that was good stuff. I enjoyed it. Karate Kid. Oh, that is a little bit of a crane. That is a little bit of a Tyrannosaurus Rex arm crane. Arms tucked in tight. Oh. Yeah, the Animals of Australia was pretty funny. She did some crazy moves, man. It was good. All right. I get distracted by that all day. Okay, so let's no. It's a good distraction. Let's talk about the VIX. So what does this mean? Hopefully you carried at least something. I wouldn't expect you have a bunch. If you have a good amount, great, good on you. If you were trading for the short term, you got some win flow. You got a great move. What a great move this is right here. I mean, that's a big retracement, right? Here's the VIX. We're literally back to 15. We are all the way back to 15. We are actually at a lower low now. We don't have a lower high. We just have a lower low. So this is going to definitely score better and is likely to give us a lower high the next time it moves up, no matter where it goes, because it's not going back up here. In fact, it definitely has me thinking, I think I should have made more of this. That was very difficult because, you know what? From the shadows, this was the next day was inside. From the body, it engulfed. So it was a very, very interesting set of candles. I mean, I think, you could make the theoretical argument that this happened and that makes that a lower high. In hindsight, yes. And I think we even talked about like, hey, this thing's coming. But, you're in the face of a market that just dropped 10%. It's hard to feel like you want to aggressively call the bottom. We said, hey, if you're going to do it, here's the time. If you're not comfortable with the volatility, sit it out. Sit in cash. What did you miss? Opportunity. You didn't lose money. You lost opportunity. So if it engulfed, what would I have predicted from that? Just whether or not I could have distinguished this to be by itself a lower high, if that makes sense, right? But typically I like to see things have convincingly turned to make those distinctions, if that makes sense. But an argument can be made in hindsight that was a lower high there, right? And that's significant to us. But there's more. It's great. We have another one here. And if it comes down, then there could be another one here. And, I mean, this could be a great bull run, which would look, let me show you. Let's go back 2 years. Go. So you can see that, like, we have these initial pops down, and then you still get another and another and another and another. So you still got 1, 2, 3, 4. Like, you got all those trading windows, right? If I show you what that looks like on the SPY, these are bullish trading opportunities, right? And if we go back to the VIX again, we have a whole nother set over here, one there, and another one there, and there, and there, right? All these times when it's coming out of these lows, remember that all of this is happening below 20, at or below 20s, where we're like, hey, there's no problem here. And if we go look at those same situations, we're coming out of what? Those high volatility spikes into the next round of bullishness. So yeah, I definitely feel pretty good about this. Right? Same kind of a thing. What do you have? Coming out of the volatility from here, you have this bull run to about right there. And then we have this, and then we have this bull run. And then we have this and this bull run. And so what do we have? We have this, and now we're thinking next bull run. We're in a bull market. Absolutely. Our posture has stayed bullish. It's going to increase. We're going to see it. And we'll do what we're told. The market tells us. We say, all right. Now, are we trading right now? That's a little tougher. I will tell you this. Here's one I do like. Google. I remember I said Google may be trying a little bit of a sneaky reversal. If it turns, we may have a go signal right there. Yeah? And that's where we have some opportunity. I don't think we have that same opportunity looking at, let's say, Meta. Meta made the big move already. Or let's say Netflix. But the group is strong. But the group is strong, so it's like, okay. Where everyone's like, yeah, it's going to be fine. The antitrust situation is going to be fine. I think we've seen some stability here. Yeah. Thoughts? SMCI. Let's see what's going on there. Who has trades that they're still carrying right now? Are you tightening stops? Are you taking profits? SMCI. Yes and yes. Good. A little bit of both. Balance. It's coming into the weekend. I would say SMCI has definitely made the break. I would say that it doesn't matter wherever it ends up in this range. When it makes its pullback, there's my go signal. Yep. I mean, it couldn't be any more clear than that chart right there, right? Closed spread on Netflix. Microsoft open on MMC. Got into SPY. Okay, love it. Getting some trading in. Love it. Let's look at all those. We just looked at Netflix. Netflix was great. Microsoft has also done enough. Everything's done enough. Everybody's recovered. Right? This is all I see here is recovery. I need a little pullback. Next bullish trend ready to go. And I'm ready for it too. Thoughts on Fastenal? Let's take a look. I think it's a tough one because it is holding support, but it's been holding support for like 2 weeks straight. The buyer's cycle supposedly started a week ago. And what have they done? Right? What have they done in that week? Kind of nothing. I think you could think about it. Let's see what the Heiken Ashi looks like. Maybe that gives us some prospect of controlling the trade. Yeah. I would say, you know what, with this, it's now or not at all. And if it doesn't go from here, if it fails from here, you're not getting one of these. That's what we're hoping for. At least something like that, where we get 2 or 3 more days, and possibly 2 or 3 more days this way, steeper, like these ones, right? So, yeah, I would say this is a good opportunity to think about it and see if it's going to catch a little bit here, because I could keep I don't have to have my stop down here. I could put my stop there and maybe even there. It's nice and tight, snug. If it fails, you're out. If it catches some movement, you see what you can make out of it. I don't know. Thoughts? Make sense? Let's hit the watch list and just look at some things. Everything looks great, of course, but we can't be like, oh, everything's so good, let's get in now. I have a better analogy. You get to the pool party, and as you get there and get ready to get in the pool, all the neighborhood kids are in the pool, and they start getting out. Are you going to get in that pool? I'm not getting in that pool. Right? No way I'm getting in that pool. Amazon. Woo! They all show strength, but it's not like we're expecting this market to crash up. This is where you see FOMO kick in, fear of missing out, right? Oh, it's moving without me. I got to get in. Hurry. Hurry and chase it. Oh. Just be careful. If you're gonna get in, you better have a real specific way, because look at this. You're like, oh, I'll use these. These are way back here. They're far away. Right? They're far away. Do we take anything from the numbers of trades on price action? How do you mean, Sandy? From price action? Do you mean like candlesticks or... Oh, what have I done? I don't want you. So if you look, and I have my stop down here, that's at 167. That's $10 away. How much have you protect yourself in that situation? So you might say, you know what? Instead of 167, I'm going to go to the Heikin Ashi, but I'm going to move it to a 4-hour chart instead of a daily chart. And now all of a sudden, instead of at 167, I'm at 172. And I'm going to tighten it to 174. And now I'm going to really be more protective. I would say that's a better thought process going into the weekend. Especially if you've got some windfall profits like we said we do right now. Yeah? Let's get this back. Well, I mean, at the end of the day, I always want to give it a chance to run a little more if I can. I just want to make sure that I've controlled the risk along the way. David had a piece of this. That's very nice. Almost all the way back up. As I said, financials looking good. What are we looking for from a sector standpoint? We're looking for money going into technology. We're looking for money going into communication services. So we're talking about things like Apple. We're looking for money going into industrials and financials and consumer discretionary. Well, we're definitely seeing that, right? We're definitely seeing that right now. BLDR, it's all the way back up. Citi. I mean, look, there's just the institutions are like, oh, well, yeah, no, you got me. We were a little scared for a second there, but we're okay. Chipotle. Here's Costco. Oh, I thought Costco was going to come down, and it just didn't. Carvana still going up. Fastenal, we talked about that a little bit. Bitcoin's coming down, though. General Motors still going. Google. So this is the one I said. My thought is, I'm thinking if we have another bullish day and Google can bust out of here tomorrow, that might be an entry right there. I'd use this as a stop, thinking that this is both the bounce, and you can see it's one of those little hiccup situations where I think, oh, we could see this thing pop. Now here's the deal. Let me zoom in on this a little bit. You guys can. Do we think anything from open interest numbers? Liquidity. The higher the open interest, the more likely you're going to find tight spreads. Liquidity. So if you have 100 contracts, there's one, maybe two market makers. It's not very competitive. You're going to have crappy pricing. If you have 1,000, 2,000, 10,000 contracts, there's 5, 6, 10 market makers competing. They know they're going to get dozens of contracts a day, so they don't have to try to they're going to have tighter spreads, more efficient market. That's why our watch list is chock full of things with high, 2-3 million shares minimum. The more the better. Yes, we take a lot from open interest numbers. Okay, so if you notice, I'm actually going to, let me zoom in one click here. 2 clicks. I'm going to use this candle to basically orient this trade. It can trigger. Now I'm just thinking about it. I'll let you know, or I'll put the alert out in the morning. I'm going to have to play with it a little bit. But basically, it would say it triggers if it breaks that to the upside. So if we ended up with a day like this, I want it triggering there. But it also means that I could trigger and it could come all the way back down if it fails, right? If it fails. Now, if it triggers there, I'm going to use this low as, no, I'm not. Take that back. I'm going to use this low as my stop. Basically, if it breaks below this level, I would be wrong. No, actually, I think I did have it the other way. Sorry, I was playing with this in my mind. I think I did have it a quarter above this level and then a quarter below this level here. Yeah, I like that better. Quarter above, quarter below. So basically, it's this range. If you look at this candle here, if you look up in this R, if you ever like, what does that R mean? That's the range of the candle. The range of this candle was $5.50. If I add a quarter on one side, a quarter on the other, that would mean my risk is basically about $6. So the question I would have is, do I have $12 to $18 of potential above here? Okay. Oh, there it goes. It just froze on me. You son of a gun. I was just about to be like, oh, it's doing so well. Nope, not yet. Come on. Come on. All right, I'm going to have to close it. Okay. I'm going to lose my drawing. Son of a gun. From right here, that is 163.22. So we'll go 163.50. 12 points would be 175.50. That's right here. That's a 2-to-1. And if we got to here, that's about a 3-to-1. Okay, so let's see if we think that's viable. You can see we can get some big moves on recoveries. 164. This is around the same area. That was 164 to 178. That's 14 points. So 18 may be a little too much. 12 to 14, that's a 2-to-1 trade. So the question you would say is, am I good with 2-to-1, or I want 2.5 or 3? If you want more, you would basically say this doesn't meet my criteria, and I'm not going to take the trade. Otherwise, you could look to take it. There's not a lot right now. For the most part, we're looking for things that are going to pull back. Waiting for pullbacks right across the board. We've just seen the market make huge runs. Coke's a maybe, but it's defensive. Do we think these defensive stocks are going to keep going strong if all of a sudden, here's what's hard, right? We get this recency bias where we're focused on, oh, but this has been strong. Has been, past tense. Right now we're expecting strength to go where? Technology, communication services, financials, industrials. Right? This is not any of those. We think this is going to keep going like this, and all those are going to keep going like this, just the whole market. You know how much money it takes for that to happen? Of course that can't happen. Right? Of course that's not going to happen. So be careful about thinking that this is setting up. I mean, Google, I'm a little bit like, well, Google could maybe just be a little delayed, a little late. It got a little bit slowed down by that antitrust news. Meta, strong as can be. Nice cup. Now maybe looking for the handle. I trade the handle. MMM, same thing. It's turned. But is it going to go, or is it going to stall? Because MMM is also somewhat defensive. Morgan Stanley, strong. These are all strong, but we need them to pull back. We don't just think things are going to keep going forever. TSM looks very strong still. The dollar staying down. That's helpful to the market. The VIX back at 15. That's helpful to the market. That tells us that the institutions who got a little panicky and started clutching their pearls are all like, oh, we got a little embarrassed that they're Standing on top of the kitchen table with a spider on the ground, like, oh, it's not that big. Walmart. Did I hear Glenn say he held on this one through earnings? They got a good trade through earnings. Ooh. Yeah. XLB moving a little. Where do we see money flow, you guys? Where do we see strength? It's right back in for communication services. It's right back in. Not really energy. It's holding there. Right back in. Financials all the way up. Industrials all the way back up. Technology all the way back up. Staples. Staples got some too. Utilities, no. Like I said, we can't expect everything. So now all of a sudden, where we saw the strength in defensives, we're likely to see it relax, ebb, and not see as much. Healthcare looks pretty good. Anyone like it? I'm not a big healthcare fan. Every time I start watching it, I'm just like, it frustrates me for some reason. I focus on the big five when I'm bullish. The big five. Tech and tech adjacent, which is comm services. Consumer discretionary. And a couple of staples that float back and forth. Financials. Industrials. That's my go-to. Healthcare is messy for a lot of reasons. It really has been for a while. Used to be only defensive. When I first came in to trading, this is pre-Obamacare, it was just the defensive. Now it's just it's hard to read. Okay, well, you give me your thoughts. Are you comfortable? Do you feel like you're in control? Do you feel like you're seeing the market with more clarity? Has anything caught you off guard recently? That's a good question, right? Has anything caught you off guard? CBRE has been lackluster. Yeah. CL, same thing. Right? I mean, here's the situation is right now, what are the expectations? I don't think any of us had huge expectations that we would be racking up a bunch of money. I think we're like, hey, we expect conditions to be a little harder. We tread a little more lightly. We still trade. I said it the whole time. I'm like, look, I think you should always keep trading. Even if it's lighter, even if it's less, even if there's more balance. And anyway, patience. Yeah. Looking with a different eye. Okay. Well, and here's the thing, right? We look at the last 3 weeks. I mean, right? Not a lot about these conditions to write home about. That's for sure. What do we have coming up? Tomorrow's a busy day. We have Glenn kicking us off in the morning. I'm pretty sure. Tell me if I'm wrong. I think he's just there for the hour from 9 a.m. to 10 a.m. Eastern. Is that right? So he's there a half hour pre-market, half hour market open. Is that right? I believe that's right. Tell me if I think that's what it is. I guess I could check the calendar. Everyone's like, check the calendar, Scott. Okay, I will. Relax. Don't yell at me. Friday market open. Oh, no, I'm wrong. 7:15. 7:15. I think he's only there for 45 minutes. I actually think he pops on at the top of the hour. So if you were there at the top of the hour and you were like, hey, Glenn, are you around? He probably would be. But officially it's 45 minutes. Yeah. Okay. All right. We all learned something tonight. It was a good session last time. Good. And then I will come on for the last 45. First 45 with Glenn, last 45 with Scott. What more could you ask for? What more could you ask for? That's how to kick off the weekend. A beer. Fair enough, Clint. Fair enough. You're not wrong. A beer and some amazing breakdancing moves, replicating the musicality and majestic splendor of Australian indigenous animals. Chocolate frappe. All right. It's good to see everybody. Look, remember we have 3 more days to finish section 1. Do you have a mission statement written? Do you have strengths and weaknesses? At least those 2 things on the first pass and 1 sentence on the other things. Even if the sentence is like, I will be committed to this. Yeah. Yeehaw. Even if it's 1 sentence, I want strengths, really thoughtful strengths and weaknesses. I want a mission statement, and you have the ability to build off of what I have in mind. And then I want at least a sentence or a paragraph, if possible, for commitment, vision, and I think there's 1 other in there. I don't remember. Let's get it. Let's get it. We're going to talk about that a little bit tomorrow. We'll talk about it a little on Sunday. Go from there. Journey of 1,000 steps begins with 1. How do you eat an elephant? Bob says I'll do it this weekend. I promise. Yeah, let's eat that elephant. All you got to do is take the first bite. Okay, everyone have a great night. Bob will see you in the morning. I'll see you in the afternoon. As always, happy trading.